So this year is going to be very telling to realize and see if rates stay up at the elevated level, are things actually going to go bad? But right now, any of this distress, any of this discount, or the massive discount rather, we're all expecting, that hasn't necessarily transpired. And a good reason for that is that the lenders are just not forcing their borrowers to do forced sales.
What is your temperature from 2023 fourth quarter, to where we're at right now, which is, February 26th of 2024?
Look, the deal is that all this distress people think is going to be here or is here is not here. In fact, I've been talking to brokers, and we were all thinking, heading into 2023, which was last year, oh, there's going to be a lot of distress, a lot of blood on the street. Nothing really happened. The thing that really happened is Class C assets and Class C locations, well, they're treading on thin water, but everything else, it's going by, right? Unless something catastrophic happens, lenders are extending and pretending, and people are figuring a way out to just keep the deal afloat. Now, obviously, these things can't last forever. So this year is going to be very telling to realize and see if rates stay up at the elevated level, are things actually going to go bad? But right now, any of this distress, any of this discount, or the massive discount rather, we're all expecting, that hasn't necessarily transpired. And a good reason for that is that the lenders are just not forcing their borrowers to do forced sales, basically.
Yeah, that makes sense. That's what I'm seeing too right now. And we are anticipating 2024 will be the best buying opportunity for multifamily and real estate that we've seen in the past 10 years. But the question is, how much will that be off? I mean, from some of the highs, right? And I'm hearing 20%, I'm hearing 30%, but I'm also hearing capital that's coming in. And What do you think about that?
It's not 30%, man. Look, is there a one-off deal that somebody can possibly acquire at a 30% discount? Yeah, possibly. Look, one-off deals exist everywhere. But we're talking, when we say 20% off, 30% off, we mean averages, right? Or a good portion of the market. That's not happening anytime soon. Yeah. Now, again, to date, what we have seen. Now, if lender sentiment changes, as an example, or the Fed comes out and says, yeah, we're not taking rates down for the next year, yeah, things are going to unravel pretty quickly. But as of today, looking out, lenders have also learned their lessons from the last recessions and realized that if they basically put borrowers in a foreclosure, typically, not always, now every lender is different. So again, I'm not trying to make a sweeping statement here. It is in the lenders and borrowers' interest to basically continue to pretend, basically, that nothing is wrong and try to figure out an amicable solution. Because the day a lender closes, they take this toxic asset on their books, and then now they got to deal with it. Because it's not like, a lot of borrowers are stupid people. It's just that events have transpired as such. Nobody predicted 500 plus basis points of increase. I mean, it's not just the private capital markets. We look at big guys like Blackstone, KKRs, Apollos, Carlyle's, Ares, and they have been caught flat-footed. I mean, I think Starwood, Barry Sternlicht is the founder and chairman of the company. I mean, Barry Sternlicht is as close to a real estate savant as you're going to get. And they are selling some of their loans off at a loss, and they've basically handed the keys back, because they're a diversified company, on some of their assets. So if those people, with all of their firepower, they're a $100 billion plus company, were caught flat-footed by this 500% historical rate increase, then this is a legitimate black swan event that nobody could have seen coming, basically.
Yeah.